All right, gang, good afternoon. Hope you guys had a great weekend. Wow, last week, for those that were following the market, was not the greatest. We were down just about every single day, pretty much ended the week in a bloodbath here. So I'm playing this week pretty much safe. Going to be sitting on my hands for the most part, looking for good setups. I don't want to chase this falling knife, nor do I want to call a bottom. So that being said, I got a couple on here, but as we're entering earnings season, most stocks, on their lows, I don't want to chase them to the downside, and I definitely don't want to call that as the bottom. So a lot are out of play until we can kind of see what's going on and get a judge on the market. So I have four stocks on here. Um, they're not that liquid on some of these because they are out in March, because we are sitting kind of 26 days and then 50 days. So there's not a lot of activity in the March cycle yet. So there is a little bit of a liquidity issue. However, these are the ones that I was only able to find that look appealing enough that I would maybe look to go ahead and put some bids on. So we're just going to go ahead and start. And the first one that I'm looking at is Best Buy. All right. Best Buy is definitely in a downtrend. It is currently bearish. We're below the 200 day, and we're actually below all the moving averages, 50, 21, and 8. While it did not tank Friday like the rest of the market did, it is in a downtrend. So I am looking just to strangle this one all the way out in March and cover a large distance. Okay, it's got earnings coming out not till March. So overall, giving this a lot of run room for either direction here. Okay, so with this one, March 18th, and I want to go ahead and sell the 75 puts and the 125 calls. I'd like to get at least a buck 70. That would only cost about $900 to put on 965. Gives a good 84 pop, and it actually leans it a little bit long, which is okay with me. All right, but we're definitely past the expected move, and we'll just kind of keep a good tight stop on this in case it does to tank and get tested a little too soon. So that's the first one. Right, I would not iron condor it, not 54 days out. I only like to do iron condors about 30 days, minus a little bit, because they are a lot harder to manage if things go bad. The next one that I'm looking at is going to be Fidelity. And now Fidelity, the options aren't the greatest. The stock's okay, liquid with about 3 million. But this one is another one, okay, that has been in a good downtrend. We had a nice little rally here, but we sort of held off at 120, pretty much just shy of this resistance line. And we're starting to break back down below the moving averages. So got earnings coming up in about 3 weeks. That's my stop there. So 215 it looks like. So this would be a Monday, really only played maybe a Tuesday. But since it's heading back down, we got some run room all the way back down to about 101 and a half. So I want to sell a call up here at the 200 day. Now, it does got good IV, does got good stock volume, but as you can see in March, there's not a lot here, nothing other than these 120s, and I don't really want to sell a call up at 120. Okay, so this was the tightest spread that I was okay putting on a naked call on here. Now this is selling the 130 calls in March, would give an 88 pop, a lot of good short delta, a buck to a buck 10 in credit, and only $1,100 to put on, so not bad. Defined risk, the spreads are a little wide. You might have to wait till Monday morning, see if they tighten up a little bit, but you could get a 30 delta for about a buck 30 and a good 75 pop. That brings you right to that resistance level there. And if it does fade, you'll be looking good. Okay, but again, it's not that liquid. You may have to fight it. I prefer these to be a little bit tighter, but that's where we would be on that defined one if you need to go that route. Okay. The next one is going to be Marriott. Marriott is another one with good IV. Not following the market so much. It was down, Friday and Thursday and Wednesday, much like the rest of the week, but it wasn't nearly as bad as the overall market. So with this one, it's kind of just hanging out sideways here. I'm looking at doing a really wide strangle out in March. Marriott, while the stock's liquid, is another one where the options are not so much. So you got to find the tightest spreads and be willing to work with that and see if you get a fill without chasing it just to get the fill. So as you can see, I am looking to go what is that, 30, almost $40 past the all-time high. So it's giving it a lot of run room to the upside. And then I'm also giving it a lot of run room to the downside, covering the 200-day, covering multiple levels of support. Okay. So with that, March, and this is what I mean, like no open interest, very, very little volume here. There's nothing on these 200s. So I'm looking at selling 200 calls and the 115 puts, but I'm not going to chase this. I would bid somewhere around, call it 170 to 175. And if filled, it's a good 90 pop, slightly short on the deltas. And, you know, buying power is less than the 10%. So not too bad. But iron conduit, no, again, just because it's 54 days and it's already going to be hard enough to try to get these fills. Okay. And then the last one that I'm looking at is going to be PDD. Now, PDD, this one also had its run up and failed just shy of hitting its resistance at 75. So we're going to see what this one does, but I am looking at this one in a shorter term cycle just because 54 days there's not as much volume as the 26-day one. So I want to go out as far as possible with this one. So I'm looking at being just below support, but also giving it some run room should she run up and gap fill. Okay. So with this one, it's going to be February monthly, right? And as you can see, not a lot. And I'm just going to show you March. March doesn't have that much either, but I don't really want to strangle it there. Just looking for a quick 30% or so. So looking to sell the 45 puts and the 90 calls. Going to lean it a little bit long. I'd like to get somewhere between, I'd actually be okay with 85. So 85 to 90 cents. This will give you almost a 90 pop as well. Little long, which is fine because it's been trending up, trying to trend up here. And it's only about 1250 in buying power to put on. Okay. Iron conduring it, I wouldn't, not with a Chinese stock, in case it does start to break out or break down. It will be easier to manage. Just to show, you'd probably be, you could, but I don't like going to a 30 delta on an iron. Let's see. You could try the 75.80 and 50.45. Okay, give you a 70 pop. You might be able to get a $1.28. I really don't like anything less than $1.30. $5 wide spreads. So it may be hard to fill, but I wouldn't do anything more than that. And that'll be it, gang. And this is all pending what happens, you know, once futures open and then obviously markets open. So watch yourselves. Don't get overly aggressive in trading. Sit on your hands. Cash is a position. Just protect yourself there. So have a great rest of your weekend, and maybe one day we'll see you guys in chat. Take care, everybody.